So basic technical analysis, like the most rudimentary foundational technical analysis, is just support and resistance. So support is a price level where a downtrend can be expected to pause due to a concentration of demand. So downtrend is when price is heading downwards, and then support is where that that action that price action is going to be expected to pause, because there's more demand there. So like it's not once you get to that level, it's like, okay, people want to buy at that price, so that creates an area of support, and it's like a safety net or a floor where the price would seem to bounce back up. So when the price of a stock drops, reaches a certain level, and then starts to rise again, or stops falling, that level is called the support. And it's where buyers enter the market in a large enough amount to prevent the price from falling further. Then resistance, that's the opposite of support. So, you got support down here, resistance up here, and support the floor, resistance kind of like the ceiling. So, like say this is price, it can't go above. Support, price coming down, can't. So yeah, imagine it as a ceiling. Stock struggles to break through. When price rises and then stops rising at the same level multiple times, that's known as resistance. And that's where sellers start to outnumber buyers, preventing the price from rising up further. And in the last section, I gave you like a common terminology page. I'm not doing that in this section because the concepts are more important, and you're gonna learn as you go. So, anyways, and then this is another thing about support and resistance is that, the main rule with support and resistance is that once a support and resistance is like broken through, that previous level will change and act as a different level. So if you break through a support, so say this is support, right? If you come down, price breaks through, so this is now going to be a resistance level, right? So it'll come down, and then say price comes back up, it might act as a resistance instead of support now, because in order for support and resistance to work, their interactions with supply and demand. So say we have a resistance level, right? Resistance, so price is below, and then price breaks above the level, it signifies a shift where demand exceeds supply now, because there's a resistance level because there's a high enough amount of supply and not enough demand to meet that supply, so price still keeps going down or stays at this level. But once there's more demand than supply, then price breaks above. So if price breaks above the level, then it signifies a shift where demand exceeds the supply. So with say it breaks above, and then when price drops back down to the level, that new demand will turn that resistance into a support, because pretty much there's like price broke above, so the supply exceeds demand, so there's still a whole bunch of demand at this level. So if price comes back down, there'll be new demand or demand that was left in order to cause price to go back up. That's the premise, the theory behind it. Then on the flip side, if it's a support and price breaks below that level, then it indicates that supply overpowered the demand, and so when price retraces or comes back to that level, the surplus of supply is likely still present, and that will turn the support into resistance. And historically, the market, like, these properties are true, but things are still unpredictable. You never know. You're never 100% with the market. So that's why, like, you always use other pieces of information and combine them to create like a plan. But that's the idea behind support and resistance. And once you start really studying charts and doing this every single day, you'll see that it's tried and true. So this example right here, this is an example of support and resistance, this screenshot. So this is the green I had marked as this is support, and the red is resistance. So this is an uptrend right here. So this is an uptrend, right? And then it reached the resistance level up here. So this is resistance, and then you see that every right here, price came down, and that shows that it's resistance because there's supply up here, and that's stopping from price to go higher. And then this is a support because look at these red candles, right? This red candle, it would never go below this level. So that's how you know it's a support. It acts as a floor, and this acts as a ceiling. and then price breaks above the level, and the theory is because demand exceeded the supply at the resistance level, that's why price went up higher. So if price were to come back down, the idea is that it would bounce because there's a newfound area, there's newfound demand at the previous resistance, and it would become support. That's, and I'm gonna go more into it. And these are just other examples of real support and resistance in the stock market. We so like this is another stock. I'm pretty sure this is Nvidia stock. This is support. This is resistance, and you can see you know multiple areas where price would bounce and reject off of a certain level. So, you got and this is an example right here. This used to be resistance because look at this, right? Look at this. We have boom, boom, and then it breaks out, and then look. So it came, it rejected, broke above, and then boom, came down. Now it's a support level, and rallied up higher, or formed an uptrend, came up higher, came back down, boom, bounce again, and then again, and then again. So that's how it works. And again, look, this is the example of resistance. So at this level, no matter what, price would not go up higher because there's a surplus of supply up here. So no matter what, like say, we rejected, price would come back down, demand would bring us back up. So like down here, there's demand, so price keeps going up higher. But as soon as we get up here, price rejects. And that's because there's supply, there's people selling at this level, and that's resistance. And then this is another example of resistance, but this is a downtrend resistance. And yeah, it still represents supply and demand, but it's just in a different kind of way. It's not a straight line, it's in a downtrend. So overall, like, there's less and less demand over time, and that can be graphically represented and shown on the chart. So say like 1, 2, 3, you would take that, and that you would draw support or a resistance level, and then in the future, say price comes back up, you can make kind of the inference that, all right, this is a resistance over here, and it's a downtrend resistance. Price might reject over here again, and that's the idea behind it. And again, here's another example of a downtrend support and a downtrend resistance. So that's, price keeps rejecting at this level, and then breaks above, price comes back down, you can see with the red candle, and then comes up higher. So example again, support, or resistance becoming a support and then going higher. And it's all just interactions between supply and demand. So yeah, I'm sure you get the point now. These are real examples of support and resistance. Green line support, red line's resistance, and they all come in different styles, but they all mean the same thing each time you see them. Support is meant to support the price from falling lower, and resistance is supposed to resist the price from going higher. And with that concept, you could build trades off of that, because the point of trading is we're capitalizing off of the change in price. So say, all right, I drew a support down here. Let's go back to a chart. Let's say I drew a support, and I saw that, okay, like over here we act as support, and then, oh wow, look, it acted as support again. So I can say, all right, if we come back down to this level, we can probably take a trade here because there's a support level. And then I could say enter right here, and then price will go up. I could capitalize off of that price movement. So say this is like $100, right? And this is 110. All right, 100 is acting as a support. I'm going to buy at 100 next time we get here. And then, oh, all right, 110 is acting as a resistance, so that's where I'll exit. Then boom, just made $10 off of my 100, or 10%. And so finding a support level or resistance level is easy, but it's not just as simple as seeing where the price will bounce and calling it a support. There are a bunch of different factors that will influence whether there's a large enough imbalance of supply or demand in order to see a specific reaction, like a bounce or rejection. And the most agreed upon rule is to find a level that has, and it needs to have, multiple instances where that price level has reacted, and you want to see a minimum of at least two around the same price level or price area, or one really really strong reaction, to determine that if it's a potential level worth noting in order for you to potentially take a trade again. And I'm gonna break down some more examples. I'm gonna show you some actual examples on the chart. So I'm gonna break this down and show you the interactions of supply and demand and how it works. Um, and I have the screenshot right here, but I should be able to. I'm gonna find it on the actual chart and I'll break it down and show you. Um, so right now this is the ticker SPY SP 500, on a daily time frame, and this level right here is 467, and that's a clear example of support. Um, and then the resistance is 478. And then for the support, we're gonna focus on that first. So, where is it? First, the full wide body candle closes strong above 467. So this is that wide body candle right here that I'm talking about. So this candle right here, this is the wide body candle. Remember when I talked about wide body candles and how they represent strong sentiment. And this is a daily chart, so that means we opened down here and then closed up here. So in this whole day, that was just demand, just price moving up and higher and higher and higher because there wasn't enough supply to meet that demand. And then we came above 467, and then the next day we opened up higher and we formed two hammer candles. So on this daily time frame, look, we came down and kind of interacted with 467 again, but we did not go below it. So that was enough right there to say, okay, we have a potential support forming. And as price continued to trade and stuff like that, you see that no matter what, anytime we came down to price level 467, we kept holding it. So that became something called a key level. And I don't note that in the book here, but that's a strong level of support, because no matter what, especially on the daily time frame, we keep interacting with this level and we keep showing that it keeps showing us that demand is strong enough to create a reaction at the level. And on the flip side, same thing with supply and the resistance. There's a strong enough reaction, and there's multiple instances where we see a reaction, so we're able to say, okay, this is a resistance or this is a support, because we have the break above, the 1, 2, 3. All right, actually I'll do it like this: 1 reaction, 2 reaction, 3 reactions. You could say this is 4, this is 5, or you could say this is just 1 right here. So that's like 3 to 4 reactions on that specific price level. So that's how you would know. And I already explained all of this right here. But I also want to highlight the 2 hammer candles. So zoom in. Wide body candle, and then hammer candle, hammer candle. And I also said they do look like doji candles as well, but that's where you would want to kind of, make an inference based off of the other candles you see previously and kind of create a whole picture. That's also why I say this is technical analysis, and trading stocks is subjective. It's an art and it's also a science, because yes, this is all backed by historical data, and you see that, over the time, these work and these signify specific things, but these can have different interpretations just based off of who you are. So yeah, I'll just say this is a hammer candle. We have the small body with the long wick at the bottom, and then a support level down here indicating that there's demand. So even though during the day price went up, all right, you're not going to understand that, but price went up and down, price came down to 467 and then ended up bouncing in that pretty much in that day and closing back up high. And then we did that again. Then after that, we opened up higher and then we rallied higher again. So let's see. Yeah, those 2 hammers opened up and closed higher. And then again, price came back down on that huge red wide body candle to test that 467 area. So this huge red wide body candle right here, this is the one I'm talking about. Price came back down near that 467 price level, and we still came again, bounced again after. The next day we opened up higher, had another price, came back down, and actually came up higher, form another hammer candle, and showing us, all right, there's a lot of demand, price is going to keep moving up. And this level is still valid as a support. This level still has a lot of demand at that area to keep supporting the price and keep causing price to go up. And that's how you need to be understanding a chart. That's how you need to analyze a chart. Look at the individual candles and form a picture based off of all the candles together. You're not looking at, just one candle and saying, okay, this went down, price is going to keep going down. Nah, man. But yeah, it's a story. It's a picture that you're, trying to understand. So, that's exactly what it looks like when there's a surplus of demand at a specific price point. And, I already marked it up, but this is just like, say you're reading the ebook. It's simple. Like, this is a support, and then each time we interacted with that level, and then price rallied up, showing that there's demand. At that level. Because if there's an imbalance or a surplus of demand, price will go higher. If there's a surplus of supply, price will go lower. That's just the rule. That's the concept behind it. And you can go test it yourself, and you should test it yourself so you can solidify those concepts in your mind. But it's going to take practice for you to recognize quickly. But, I showed you how, those candlesticks that I taught you in the previous section, and the supply and demand constants behind them, how they actually come together to show to create this candlestick chart, and for you to actually analyze and see, all right, this is how it's applied in real time, in a real example, in the real scenario situation in the market. And now we're just going to do the same thing for resistance. Now I'm going to explain and break down everything, so you can understand everything on the flip side, and just again solidify those concepts that I'm explaining. So you see all the different times the candles reject 478. That's 478 price level of resistance. First time it rejects, it's a doji. So previously I mentioned how doji candles represent indecision. Explain how a doji represents indecision in the market, and it represents how the forces in supply and demand are kind of balanced. And I explain again, I'm always going to say, you always have to look at the individual candles in relation to the other candles and the context, like the full context of the market and what's happening. So, focusing on the doji right here. And we're technically price is moving up, and then we hit that resistance, we get a doji. So instead of there being a surplus of demand, now there's a doji at a potential resistance level, and supply and demand forces are balanced. So in order for there to be a surplus, there's more demand. If it's balanced, that means supply and demand are equal, or not really equal, but the forces are closer to equal, and they're not imbalanced anymore, meaning that, there's more supply coming into the market. There's more sellers coming into the market. And that shows a shift or a change in the sentiment. Instead of there being more demand than more supply, now more supply is coming into the market. And then you would have to wait for the next candle to really see if that theory is, true, or if it's just like a little pause. Because say we have a doji right here, but then the next time price goes higher. But now we have a doji, and then price came back lower, or went down lower, showing, all right, there's more supply after all. And, more supply, there wasn't enough demand, so price came back down until it hit that support level again, where there was an actual amount of demand. And then, boom, look at that, another doji again right here. And that doji has a long top wick and a short bottom wick. So, so that means that during the day, price traded and actually did go higher, but in the moment, there was not enough demand to keep the price up there for it to close up there. And you could see that that wick down below showed that there was selling below the support level, but because of the fact that there was so much demand, it didn't stay down there long, and people came in and bought up all of those shares and caused the price level to, I mean, the price to stay above that support. And then look at the next day, huge wide body candle showing that, all right, demand, there's a huge surplus of demand again, and that support level is a strong level, and there's a lot of demand. So people saw that, they wanted to buy, and price went up, came here again, rejected. I'm sure you get the point now. And do want to highlight this as well. So right after the doji, you see that this right here is a hammer candle. And I told you, hammer candles, they have their meanings, but in this case, it's kind of meaningless. Like, yeah, it's a hammer candle and it shows buying, and by itself, all right, you might interpret it that way, but in this case, we had the doji right after an uptrend, or just upwards movement in price, and then it rejected and price came down lower. So you can't really interpret this as a bullish signal in relation to the rest of the stuff, because just it's just important to interpret what you're seeing as things move along. Yeah, you just need to be thorough and understand and read the action taking place in front of you. And then for the next three candles, every single one opened lower and lower and lower despite them being green. So price kept moving lower, showing that, again, there's a surplus of supply now instead of demand until we got to that support level. And yeah, those are examples of how support and resistance are validated and created by surpluses or imbalances of supply and demand. And a breakout, I already touched on that. It just occurs because there's a shift in the sentiment. So there's a surplus of supply over here, and then suddenly there's a huge shift in the balance, and there's a huge amount of demand, causing a breakout of that resistance level. And normally when there's a breakout, it needs to be strong like this, with a wide body candle or serious volume to show that, all right, it's a real breakout. And we'll touch onto that more in another section where we actually talk about taking trades and different strategies and stuff like that. But that's just how it works. And yeah, that's support and resistance.